JB here. Hope everyone's doing outstanding. February 18th, 2025, 9:01 on this fine Tuesday. Talk really quick about the market. Some names I'm looking at, go from there. But take a look at S&P futures in the green. The SPY's at 612 here. Despite every headwind, right? If you've read some, and we had 3 days of reading headlines over the weekend, you would think, you know, oh my gosh. I mean, there's just, I posted in the watch list, one of them, I mean, Wall Street Journals. Oh, the sentiment, what was it? Lowest since pessimist about the individual investors haven't been this pessimistic on stocks since 2023 or whatever. Then there's uh, just everything, and then of course you have the inflation situation, and I mean how many articles you have to read around egg prices. It just and then here we are. You would think the market would be gapped down today, so tune out the noise somewhat, and they always say the market tends to climb the wall of worry. So we'll see what the next hurdle is. There's also I've seen pieces saying, "Oh, the market has forgotten about the inflation. They've pushed that aside, the inflation worries." And I don't know if that's the case yet, but we'll find out. It's not much in the way of catalysts this week. We have the Fed minutes tomorrow at 2 o'clock. We have Walmart earnings Thursday morning. So that's probably, and then you also have BABA. But the Walmart earnings on the heels of Friday's retail sales number, which was the worst in like 18 months, that's probably a little more important. But of course, we've had these data pieces over the years. You would have even employment numbers. They always look down to natural disasters or the weather or things like that impact the results. And sure enough, that's what they said with the retail sales data. We have the coldest winter in 15 years, so that's some of it weighing. Then you have the fire in California. So who knows how that all impacts it, but yeah, we'll see. But those are kind of the events this week. But for now, probably some chop here on the spine. The 611 611.23 is the upper Bollinger Band on the SPY, so maybe some chop here today, tomorrow, and then maybe 615, and then you got to start worrying, not worrying, but maybe there'll be some consolidation. Oh yeah, there's other pieces, right? And you see this time and time again as the market goes up. There'll be articles, oh, biggest amount of levered margin on stocks in history, right? It will say the highest amount of margin dollars, right? But because the market is going up, it's a function of the market going up. If people have leverage in place, the leverage is going to go higher because the market's going high. So it's always funny that. And then the other is the least amount of cash on the sidelines in 10 years, and it's like it's 3 or 4%, but then it's because the market has gone higher. So as the percentage of money, right? If you have $2 on the sidelines and the market is at $10, that's 20% is on the sidelines. Now when the market's at $20, that's 10% on the sidelines. So, as the market goes up, the percentage of cash on the sidelines obviously is going to go down. But anyway, they spin it every way to get some FUD and fear, uncertainty, and down market. And here's the Wall Street Journal. Investors haven't been this pessimistic about stocks since 2023. Anyway, so that's the overall market. So maybe some chop here today. We would like to see, if we do get some weakness. I think it was 608 and change was Friday's low. No, 609.07 was Friday's low. So want to see that hold. And also, I think it was like the tightest range since the start of December, 0.31% on Friday. So pretty tight trading range. In the heels of everything that went on. So pretty impressive. So I want to see yields go down as well. Maybe it takes the next leg. Yields were down nicely on Friday and some continuation there. And then last but not least, the silver lining here is that small caps are still flat on the year. So if there's outperformance, maybe it's going to be in the small caps now that the S&P is up about 4% year to date. All right, so now individual names. First, just really quick about WYNN. WYNN, I talk about some names that I've traded over the years, and WYNN's one of those for the last decade or so, right? I call some of those names the OG, the originals, right? So it was gapping, running after its earnings. It actually didn't have a good post-earnings move, but then at the open, it started to rally. Then you also have China sentiment kind of twisting, getting a little more positive in regards to China sentiment. So those two factors, I think WYNN has an opportunity, maybe some continuation here today. The stock back in October was over $100. Does it get over 100 in the coming days? Possibly. So I'll be watching. It closed over its 50 and 200-day moving average on Friday. I got those 95 strikes. If I get a chance, I almost had a chance on Friday, close them out to cover costs for 100%. I'll look to do that and then ride the rest. And don't be surprised if it has some continuation here today, if I add more strikes to play for move over 100 in the coming weeks. A teladoc monster move Friday morning. I think it was over. It tested 1521 in the morning, then gave most of it back. Still closed up 6%. My March 15 calls were up nearly 1,000%. I've locked some of those in already. I still have the March 20s. I was looking at April 20s. By the time I start looking in the morning, those had already doubled in value. So I'll be patient. If it has some consolidation here today, I'll look for some April strikes, and I might start locking. I mean, my March 20s are solidly in the green. They were more solidly in the green, obviously, Friday morning. But I would probably want to take some risk off and then add the April strikes. So that'll be the plan there. But still like that one. I think Teladoc reports February 26th, and who's the other one? And iRobot's March 12th, and Redfin's February 27th. So those are the earnings. So kind of want to get calls to encompass those earnings reports, but at the same time, take some of the risk off with profits to ride. So here's iRobot. Monster was all the way up to over $10 on Friday, gave some of it back. No news, no cattle, still up. I think it was up 20% last week. I'm still looking to add some more March strikes. So hopefully it gets over $10. We'll see if that holds. I'll look for some more strikes there. Great sign that it's having some continuation. Not only that, they had the ICR conference. They announced the preliminary data for their earnings. That's some of the reasons you see that gap from 10.50 all the way down to $8. And now it's starting to do a gap fill. So gets over 10.50. I think that 13 handle comes. Redfin, great day, yes, on Friday. It reversed morning lows, so a good thing, a good reversal, up almost 4%. Again, they have earnings next week, and I was looking at the March strikes, maybe the March 12s, inexpensive on a risk-reward basis. If it has some kind of, not a deja vu move that we had back in the summer, but similar setup and decent earnings. Unfortunately, Zillow had earnings last week that disappointed, but maybe there's an opportunity here for Redfin. And then I talked about what Redfin, when Zillow reported earnings, they announced a partnership with Redfin to list on their apartment.com listings and be a partner for them. So I think that bodes well too. Can't be negative. So that's that. Did I talk about Roku yet? I'm having brain farts here, but Roku, finally a great day on Friday. All the way up to 104, 105, and right after the open, I didn't want to see continuation and miss out. So I locked the 110s in, and I was actually having trouble with my platform. So I was worried about not being able to close them in. And then I went and got some later strikes just in case for FOMO. Obviously, going to need a big move for those spec calls I added after I closed the 110s. But if there's continuation here today, and they announced a shelf offering, which, you know what, Roku, they've done that in the past. A shelf offering just means at some point they're going to raise cash, right? So if you're a publicly traded company, that's what you're there to do, right? To use it to raise cash if you need to. And they say 2026 to be profitable. So this is probably just part of the plan. So I don't think that's any net negative. And companies, especially if your stock price goes up, it's a smart move. But if it breaks over 100 and holds up, maybe I'll look for some March strikes. Those premiums came down. The March 120s look interesting. So don't be surprised if I had some strikes there. TripAdvisor reports earnings Thursday before the open, 14% implied move. As much as I have conviction in name longer term, and it's up, what did I put on over the weekend? It's up 24 or 29% year to date. So it's going to have a monster beat and raise just to have a big move. So as much as I'm convicted in the name, I don't have enough conviction that's going to be a monster beat and raise. And even if I did, the market might not react as positively. So I'll probably look to close the Junes before Thursday after hours, and then just ride the March strikes and then revisit adding more strikes after the earnings. Already been a nice trend on TripAdvisor. Got lucky with that Dell move and Dell AI move, Dell X, excuse me, on Friday afternoon. Of course, in hindsight, it would have been nice to close the last of my calls. And also in hindsight, I probably should have added strikes for this week as opposed to getting the spec calls. But what are you going to do? It's up at 1650 here in the pre-market. I'll continue to watch Dell here. It's been frustrating recently. And actually had a Bank of America maintain their buy rating, but they lowered their price target to 150 on Dell, but that's still substantially above where it's trading right now. But definitely a name I'll be watching, possibly for more spec calls. AMD as well. I still have strikes into this week. You have Benchmark reiterating their buy rating this morning, kept $170 price target at AMD. At some point, this rallies. That's AMD, Dell. And last but not least, your Lemonade. And, it's got last week at this time, I think it was Tuesday, a week ago, it was near $39, and then it just couldn't break through. If it breaks 39.20, I might not only look for some more spec calls, but also look for some calls at the earnings. Premiums are very pricey. They report earnings next week, but the 55s, and I think they added more strikes too. The 55s or even the 50s, I might look for some premium build, because if it rallies into the 40s, the 50s or 55s are going to they might be a double or so. Lock some in, cover costs, ride the rest. Yeah, Solar Edge is tough, right? You know, I mean, it has the possibility here to squeeze. Monster Day on this last week, and even on Friday, I was looking. So maybe, I don't know. I put on a watch list too. I have a lot of risk on. So some of the worst days over the over the years are those days when you have a lot of risk in and everything's going great, and then the next day they pull the carpet and then everything just gets destroyed, and those are miserable days. So I don't want to be in a spot where that happens. So I'll probably just sit on the sidelines, but definitely looks interesting. I mean, it's got that huge, what's the short interest now? 41% of Solar Edge. And not only that, you had end phases earnings you thought would bode well. So we'll have to see how that plays out. Anyway, let's have a great day, folks. I'll be back. Rock and roll.